All right, good morning, everybody. My name is Phil, and the company that I chose to invest in is the Intel Corporation. So a little bit of our overview today. We're going to go over about Intel, my investment thesis, industry analysis, company analysis, valuation, and our recommendation. So a little bit about Intel. Let me move this real quick. Let's see. Okay. So Intel founded in 1968, very well-known company in this sector. They make microprocessors, chipsets, PC chip processors. They do data solutions. They have several big parts of their business that involve really making a majority of their business doing processors and computers. They have several business segments. Their biggest ones are client computing and data center. And a lot of their revenue is internationally, outside the United States. 30% of the sales comes right out of China, 20% from Singapore, and 15% from Taiwan. About 20% is in the United States, and the company employs over 100,000 employees. So here's my investment thesis. So as you can see, I believe we opened around $50 today. So just under $50. Expected return of 24%. 52-week high was 69.29. 52-week low was 43.61. They have 2.64 dividend yield with a market cap of just over 200 billion. And here's my target price of $66. Now, I'll explain how I got that. So each of us in the class, we made what's called a discounted cash flow model. And what we do is we use Excel, which is full about over 300 cells of the company's income statement, balance sheet, cash flow statements. And what we do is we create assumptions based on the income statement and balance sheet. So we make assumptions for each one, and we determine our exit multiple, and that's how we determine how we get our target price. So our investment thesis, or my investment thesis. So they have a multiple of 6.2%. They average 60% gross margin, which shows they're retaining more revenue capital over cost of goods sold. This has always been something that they've done very well. And I continue that they will do that. And also something big is they sold a lot of businesses that they were what you can say second tier players, so not their biggest strong suit for their business. And this allows them to focus on the bigger parts of their business, and they really gain a lot of liquidity from selling these businesses, and it allows them to invest in the bigger parts of their business, such as their processes and all the other good stuff. So risk to investment thesis. So we have, actually, these are two things that are very big for this company right now. So product and manufacturing risk. So production timing delays, lower manufacturing yields, lower manufacturing throughput times, and product defects. Production timing delays have caused the company to miss design windows, and that can really result in a loss of revenue opportunities, and it could damage their customer relations. And then we have global economic risk, as we are seeing right now. So this company, their sales outside the United States are about 80% of their revenue. So changes in global economic conditions like recession, changes in fiscal, monetary, trade policy, higher interest rates, inflation, unemployment, lower consumer confidence, that can really harm their demand for products and make it more challenging to forecast results and make business decisions. So right now in this company, they're experiencing manufacturing delays in what's called the 7 nanometer chip processors. And that is happening because of the global pandemic right now. So number one is a result of number two right here. And then obviously we have cybersecurity and privacy risk. Many tech companies like this experience this. They're a target of computer hackers, organizations that try to sabotage and really just hack them. But it's not a huge. They have grown to be able to manage that very well. So industry analysis. So Intel, member of information technology industry. This resolves around manufacturing electronics, software, computers, different products like that. Many of the competitors of Intel do PC chips and semiconductors. And obviously this industry has performed very well this year, the best performing industry. And that's really a result of not really companies like Intel, but that's really looking at Facebook and Microsoft, Apple, who have really all done very well this year. So here's my peer group analysis. We have AMD, Qualcomm, Broadcom, Microsoft, and NVIDIA. So Broadcom, we'll start with that. They develop digital and analog semiconductors, including storage adapters, controllers, networking processors. 35% of their revenue comes from the United States, and internationally 45% coming from China. So next we have NVIDIA, founded in 1990. A lot of their business does 3D graphic processors and software. Most are aimed towards computer market, so 80% of their sales come from Asia and Taiwan and China. Next, we have Qualcomm, founded in the late 80s or mid 80s. They do digital wireless communication products and computer chips for mobile phones. The biggest customers are suppliers and phone companies like Apple and Samsung, and about 90% of their revenue comes from outside the United States, half of that being in China. Then we have Microsoft, obviously one of the biggest companies around, founded in the mid-1970s, one of the most well-known leading technology companies in the world. Big software company. They do a lot more software as opposed to Intel that does a lot more hardware. And they do applications and cloud services. The revenue is split pretty evenly between the United States and internationally. Then the biggest competitor of Intel is Advanced Micro Devices, AMD. They do semiconductor products and devices, microprocessors, chipsets, graphics. About 75% of their sales come from international customers, 25% in the United States. And actually also, these companies all are different in terms of different financial data. So in terms of dividend yield, we're looking at Intel and Broadcom as the highest dividend yield companies in this mix of companies here. NVIDIA, AMD, very low, Microsoft low dividend yields, and they all have a pretty even beta as well, between 1.20 and 0.90, so they're all in that range of a pretty solid beta. So next is our company analysis. So we'll start off with our management here. CEO is Robert Swan, very well known, great reputation in the business. He's earned his bachelor's from University of Buffalo, MBA from Bingham University. Before being CEO, he was the chief financial officer of this company for many years. Again, very well-known guy throughout corporate America, CFO of eBay, Electronic Data Systems, and he began his career at General Electric for about 15 years. Next, we have George Davis, the Executive Vice President and Chief Financial Officer, received a bachelor's at Claremont McKenna University, MBA from UCLA. He actually joined in 2019, and he came over from Qualcomm, one of their competitors. where he served as the chief financial officer there. Next, we have Arcana Archidescus. Received her bachelor's from Boston University, MBA from Rensselaer Polytech Institute. She's one of many women now coming up onto the forefront of corporate in this company, and that's something that they've stressed that they'd like to diversify their management, and I think that's pretty attractive to anyone that's looking to invest into a company. And last, we have Greg Bryant, Executive Vice President, General Manager of Client Computing Group, which is Intel's biggest business segment. Bachelor's from University of Kansas, master's from Golden Gate University. Now, he received his bachelor's in electrical engineering, which is pretty big because Intel has come under scrutiny for not having engineers run their company up in corporate. And in the past, when they were very successful, they had a lot of engineers running their company. And when they kind of turned from that, they kind of received a lot of scrutiny for that. So next, we have our revenue breakdown. So again, we have client computing and data center, really a bulk of this company. Client computing is about 52% of their revenue. They do a lot of CPUs for the computers and mobile phones and devices. Data center, 33%. They do CPUs for pretty much large enterprise grade hardware and chips and server platforms, cloud, government, communication infrastructure markets. And then Internet of Things, high performance compute retailers, and this is about 6%. And then their non-volatile memory solutions, 6% also. This was sold, this part of their business was sold, where I said they're pretty much a second tier player in that type of business. They sold that to SK Hynix for $9 billion. So they were able to get out of that. And then about 3% of their last is programmable solutions, which is they do semiconductors for communications, industrial, and the military. So CPU market share, again, a big part of this company's revenue is in CPU. And if you want a CPU for your computer, you're really picking between Intel and AMD. AMD, their biggest competitor. 64% of the market share belongs to Intel. This is a drop. It has been higher in the past, but yet they still have 2/3 of the market share in this. And if you look at the picture on the right, this very laptop that I'm using right here has an Intel Core i5 7th generation processor. So that's my actual laptop right there. So Catalyst. So
again, on the market share, could I ask you, have they been losing share to AMD the last 3 or 4 years?
Yes, sir. Yes, they have, and I think again they're turning more focus to that. Again, they sold that segment of their business, the memory solutions, so they have become more liquid. They are now starting to invest more into their processors, the 5 nanometer, 3 nanometer, 7 nanometers. And again, part of their big manufacturing delays right now are in that. So I am seeing, hoping that will rise in the future.
Okay.
So Catalyst, a lot of products coming out in this company. They just launched their 11th generation core processors called Tiger Lake, designed for notebooks, faster gaming, streaming, increased productivity, and faster content creation. Coming out with a new brand platform as well called Evo. This offers premium connectivity, audio and video, along with instant wake, fast charging, and extended battery life. They're expected to offer about 40 of these designs by the end of this year. They're also benefiting from explosive growth this year in data traffic demand, as the pandemic caused this transition into, digital economy. And, I think we're seeing a lot of businesses now looking to stay online for the long term. And, it creates a much larger digital workforce. And, this could be, um, attractive to these type of companies.
Bill, have you heard anything of whether or not they're on schedule for the 2020 for the EVO, or if they're experiencing any delays?
They're not experiencing any delays in this, but they are. I'm going to get to it, but they are having delays in some of their processors, but this specific design, no.
Okay, thank you.
Yes. And also they are seeing an increase in entry education PCs. So again, a lot of kids are home for school now. They've seen a bigger demand in that, while they've seen a lower demand in enterprise server. So I like to add this into my presentation, 10-year price chart, and I can really explain this. Pretty consistent upticks in growth throughout the last 10 years. And if you look at the high here, right before the pandemic, they're at their high. They're doing very well. The pandemic really hurt them. They came back, and then again, they dropped because they announced major delays in their manufacturing. And then because of that, their revenue is looking to slightly decrease in the next couple of years as they try to get that rolling again. So next we have my valuation.
Just going back to the chart, if I could ask, if you looked at that like on a relative basis, relative to the S&P 500 or relative to the tech sector, I mean, how is it done relative to tech in the S&P the last 10 years? I know the AMD chart is, it's the tale of two cities, right? AMD was
Right.
single digits 10 years ago. Now it's almost $100. So
Yes, sir.
it seems like it's just good to see things on a relative basis. That's all.
Yes, sir. Thank you. Like you said, AMD is up 150% this year.
Right.
So compared to, I actually compared this to the NASDAQ because that's a very tech heavy thing. So Intel is down 25% this year. The NASDAQ is up 28%. So again, I feel that this is very undervalued compared to that. I think the news of all these delays have really impacted that. Again, this is a strong company, decades of experience, plenty of cash. They're investing in their products. I think it was just massively oversold in terms of their delays and then their decrease in revenue forecast for the next couple of years.
Just if I could, I mean, do you kind of see them as I think back to IBM. IBM was this, this cutting edge tech company for years, and it just became a mature company, and now it's, trying to find itself, and it's, but I think sometimes especially in tech, these tech companies become a victim of their own success. They just get so big that they become these lumbering elephants. They can't move quickly enough with either the technology or, whatever happens in the marketplace. So you wonder, does Intel have that type of stigma now, that it's just, it's mature, it's big, it can't move as quick as it could 10 years ago. And, you look at AMD, I mean, it's been a parabolic moonshot. And they're just, AMD's quicker to market, it seems, with the technology. You think Intel has the ability to sort of right the ship here?
I do. Again, I also look back on Microsoft a long time ago. There were, people thought kind of the same thing there. And I think they brought in some new management and they really changed the way that they did things. They changed how the different software. And I think they really turned themselves around. They really did very well after that. That's a good point. AMD is coming to the forefront. And I think it's up to Intel to use their decades of experience in this business and really invest in the newer types of technology now, where they have to really start to create faster PC chips. But I do believe that they can, with more newer engineers in their management. Absolutely. Thank you.
I believe they're getting rid of some of those second tier areas of the business is part of a movement forward.
Absolutely.
What are their plans?
Yes, so they're recognizing that, like you just said, they're getting out of businesses that there were second tier players in. And I think they're using that liquidity that they got from that, and they're really investing into their client computing business, which is the PCs, chips, and all that. They're really investing. I think they're really focusing their energy where they see those declines. And I think that they're making strong moves and getting out of businesses that they really don't see themselves thriving in the future. So here is my, I believe, valuation. So here's earnings estimates in the last, from 2018, 2019, 2020. Every quarter in 2018, every quarter in 2019, they beat analyst expectations. I think it, shows that they could perform better than what people are expecting. And then we have our revenue growth. Again, they've said that their forecast for the next couple of years, not much growth in revenue. Again, they have their manufacturing delays in the 7 nanometers. And again, I think high demand for PCs during the pandemic really got them to level off, because despite their decreases in data center revenue, they did have that higher demand of PCs, and that really offset that decrease. So here's kind of
if I could ask, going back to the prior page on the beating the earnings, do you know how they beat the earnings? Did they beat them on margins or revenues, or what was sometimes it's good to know what the impetus is of the beat, right? I mean, the market doesn't treat all beats equally. And, if someone's buying stock back, they beat the numbers because there's less shares. The market's not going to give people credit for that. But if they're actually beating on more organic basis, like revenues, and the market will give them perhaps more credit. So I like to look at where the beat came from sometimes.
Sure. So actually, in the last few quarters, they've had beat on certain segmental revenues. So again, like I said, their client computing revenue did beat expectations. Their data center did not beat revenue expectations, but it balanced out. So their client computing revenue beat expectations by 7%. So was it 7%? Their client computing last quarter did very well, and yes, it was based off revenue.
Okay.
So here's my undervaluation. Again, I said it was oversold, and they're taking proper steps of exiting their businesses. Like I said, they exited their memory and mobile device basebands, and they got very liquid from that, and it allows them to really focus on investing in their business, bigger parts of their business. And it shows that they're really like doubling down on their processing business. And they got very liquid from this. They have plenty of cash in this business here. The shares of this company fell from news of their delay, and they fell in the third quarter this year again, after that they announced that they're going to have revenue decline and in their data center. And I'm confident that they managed this pretty well, and I think they managed unforeseen issues in pretty unprecedented times. And I think that I think this is pretty factored into the stock price right now. I think a lot of investors have factored that in. And, it's all about moving forward here and how they can respond to that. If they can get those manufacturing delays in order. And I think that could be a big positive for this company moving forward. And so my recommendation would be to buy this. Price target of $66. They have a pretty healthy dividend. compared to their competitors. I think this will make a good investment for the fund to add to our technology positions. We already have Facebook and Microsoft, and I believe, not sure how they did this week, but I believe Facebook is just under 4% of our portfolio. Microsoft is about 7, a little under 7%. So we have our IPS, we cannot go over 15%. So I am thinking that we should invest around the same amount that we have in Facebook. Thank you very much.
Would you say this has been a pretty big relative underperformer in technology this year?
Yes, absolutely.
And what if there's another delay in the next quarter, would that prompt you to sell the stock? Or is this a value trap? Is this a value trap where they can't get out of their own way? There's operational problems. Again, the lumbering elephant, they've had 2 gap downs. The stock, in July went from 60, down to 50, and then it rallied back to the mid 50s. Then it had another hiccup. So, at some point, is this a value trap? Just a cheap stock that's bumbling around operationally, and at some point, you gotta move on, right? So, you think this is some element of a value trap with this stock? Cheap for a reason. It's cheap because it's got operational problems, or you just think this is a long-term winner relative to AMD?
I think that I do think I am looking at a longer term here. I think a longer term, it's going to take a couple of years. I think their revenue will go back to increasing forms. They do have to get the manufacturing issues under control here. But again, I think the company just came out and said that they might be outsourcing that issue, so going to a third party. So I believe it's TSMC. So, I think that could really help them along here. They are going to be making that decision in the next month, whether they want to continue doing it themselves or whether they're going to outsource that. So I think that is very strong. Now, I do have a quote here that I would like to share, if you don't mind. This is from the lead analyst of JP Morgan. And he said that, following the 7 nanometer delays, we continue to feel comfortable and confident and believe Intel is making progress on its internal 7 nanometer process, as well as working with TSMC in parallel, and will deliver on its key product introductions in the 2021 and 2022 timeframe. So I think, that says a lot there. His target price is actually higher than mine. So, I think this is, again, oversold. I think people got freaked out. Manufacturing issues. We're in a pandemic. It is a risk, but I do think in the long run that this could be a good performer for us.
But what would prompt you to sell the stock?
Like when?
Next 12 months?
Next year.
Yeah.
So again, I think if we were to buy it, and I would prompt to sell if they were to come out with more manufacturing issues in the future. But it looks like, again, depending on whether they're going to outsource. If they're going to outsource, I'm not predicting any more manufacturing issues. If they continue to go about it themselves, I think that's more of a risk. We'll have to wait and see.
Sometimes I use the concept of if you didn't own the stock today, would you buy it? And if the answer is no, then you should probably sell it. Sometimes people have owner's remorse, right? They own it because, they don't want to sell it because they own it. It's just psychological. But, you just have to remove yourself sometimes. Would I buy this today based on what I know? And if the answer is no, then you should probably sell it. But certainly time will tell. It's been an underperformer relative to tech, but if they can outsource this and get back on track, it should do well. So
Yes, sir.
Time will tell.
Are there any other questions for Phil?
Phil, I've got one for you.
Sure.
You said how it's fitting in with Microsoft and Facebook. Could you just elaborate on like how it's fitting in, how it would complement the portfolio? I know it would, but I thought you might be able to share some more insight in that.
Yeah, I think it's just another. I think tech these days is just good to be invested in. I think we have about 10% in the portfolio for tech. So, there's always, I would like to add more. And actually basing off Microsoft, you all may be thinking, that's a big competitor of Intel. Microsoft does more software and Intel does more hardware. And, the two actually work together. So, in terms of being competitors of, Intel, Microsoft, not really like a big worry of mine. But, I think this stock has a pretty good dividend. And, I think overall, it would definitely help this fund.
All right, are there any other questions?
Yeah, Phil, I have a question too.
Sure.
So I just saw the other day that Intel partnered with Amazon's cloud computing service, and they're coming out with new artificial intelligence hardware business. You see this as a potential catalyst for the future and kind of just like a step in the right direction for Intel?
Yeah, I mean, these days, obviously, anytime you're gonna partner with Amazon, I think that's a good look to anyone. And, I think it's just another part of Intel investing in the future and what they think can be successful for them moving forward. So yes, absolutely.
Phil, I have a question. What do you see as like the major differences between Intel's processing chip and AMD's, and like why would a like computer company pick one over the other?
Yeah. So again, I think each processor between the two is different in terms of quality, speed, price. So I believe AMD is called Ryzen, where Intel is Core. So AMD chips are a little bit more expensive and used on more high enterprise devices, where Intel, as we saw, has the bigger market share and much older. AMD is more newer company. But yeah, it's really about price, pricing and what people are willing to pay. And each newer one's coming out faster processing, all that good stuff.
I'm sorry, I asked you this question earlier. You said that on the CPU side, Intel had 64% market share and AMD had 36%. Did you say Intel's been losing share the last 3 or 4 years to AMD on that?
Yes.
Do you know what those numbers were like a few years ago? Was it 80-20 or was it?
It was, so I believe back in like 2015, 2016, Intel had about 80, high 70s.
And do you think AMD is going to continue to gain share?
Personally, I don't think not too much more, because I don't think Intel originally saw it as big as a threat. And I think, again, they're selling more of those business segments that weren't good for them. And they're really investing into this segment, their client computing and data center, which is their processors, their chips. They're really investing in all three of those 7, 5, and 3 nanometer chips, which is a big competition with AMD, but they're really going pretty full force with that.